All right, today I'm going to simplify the entire 401k rollover process for you. Hi, I'm Justin Martin, a Senior Wealth Advisor with Legacy Wealth Management. So in order to roll over your 401k, you need to be in one of three scenarios. Either number one, you've left your job, number two, you're retired, or number three, you got fired. Now, when one of those things happens, you're going to want to take your 401k retirement plan with you because it's not very exciting when your employer is no longer your employer, and you really can't do the same things with the 401k that you could do before when you were working at that job. So we actually want to move it from your old employer's 401k to somewhere else. This is why people call it a rollover. Now, the correct verbiage that you'll use when you're talking to the 401k department or to your financial advisor is, I would like to roll over my 401k to an IRA. This process, it's not really that big of a deal. It's quite simple, actually. Think of it like moving money from one pocket to the other pocket. Let's say you have a $100 bill in one pocket and you move it to your other pocket. It's still $100 regardless of whichever pocket it's in. Similar to your 401k. When you're moving money from your 401k to the IRA, it's still the same money, it's still your money, it's just a different name of the account, 401k versus an IRA. This process of moving money from one account to the other account, it shouldn't have any charges associated with it either. So don't let anyone charge you for processing a rollover. Now, let me back up a little bit here, and let's talk about this 401k. When you started the 401k and you opened up that account, you set it up where a certain percentage of your paycheck was going into that 401k. Now, that money that was going into the 401k account more than likely was going to a traditional 401k. And in some cases, it would be going to a Roth 401k. Now, I have a separate video that I've posted that talks about the difference between a traditional and a Roth and the tax implications involved there. So go to that video and we'll save that content for over there. But to keep it simple for today, just know that the traditional 401k was money going into that 401k pre-tax money, meaning you haven't paid taxes on it yet and you plan to pay taxes on it in the future when you take income off of your 401k. Whereas the Roth 401k was set up as an after-tax contribution. You paid taxes on that money and the money was contributed into the Roth 401k. Now, this becomes important as we now go to roll over the money from your 401k to an IRA. We need to specify which IRA the money is going to, a traditional IRA or a Roth IRA. Now, opening up those accounts, the traditional IRA and a Roth IRA can be very simple. At a brokerage house, you can open up a traditional IRA or a Roth IRA with a $0 balance, and that account is ready and prepared to receive the rollover. So now that the IRAs are set up, we can now go back to the 401k plan. And typically at this point in time, you're calling up the 401k group that holds that plan and letting them know of your intent to roll over the money. More than likely, that 401k group is going to have some type of a document that you need to sign. It's usually a very simple one-page document, but the reason you're signing that document is to specify and let them know that your intent is not to take the money for you personally yet, but the intent is to move it from a 401k to an IRA. Why is that important? Because of the taxes. If the money moves from the 401k to the IRA, then you're not worrying about the taxes and penalties at that point. The money's just directly transferring from what's called one qualified plan to another qualified plan. The 401k plan to the IRA plan, okay? It's directly rolling over, so you're not paying any of the taxes and penalties. So make sure that you're in contact with that 401k group. Now, if it's still getting a little too confusing there with the paperwork, or you can't quite figure out who to call or where to go to, give me a call. Reach out to me and I'll help you walk through that process. We work through these all day, every day. And so we've really got it dialed in as far as how quickly and simply we can make that transition happen. But once that form is filed and that money is moved, now the fantastic thing is the money is out of that employee 401k plan and it's in your IRA. And why is that IRA so incredible and so powerful? Well, for a few reasons. Number one, typically the management fees tucked in to these types of accounts are a lot cheaper in an IRA than they are inside of those 401k plans. So you're going to be saving yourself more than likely on the fees associated with the account. The second, and probably even more beneficial part of all of this, is that IRA allows for you to have a lot more flexibility with your investment strategies. Now you can go out to the marketplace. Now you can go look at different types of assets and begin to invest in a more efficient way for you, as opposed to the 401k plans that typically can be somewhat limited in their investment strategy. So let's get to that point. Go get those IRAs set up, call the 401k department, and again, if you need any assistance with this at all, please feel free to reach out to me. Let's set up an appointment, let's set up some time, and we'll walk you right through that and get you on your way. Thanks. And don't forget to subscribe to our channel here below, as we will continue to post more financial tips to assist you along in your financial journey. So thank you again for joining me here, and we'll see you soon.